Ever been in a situation where you needed a little financial bump, but your credit score was staring back at you like a judge about to deliver a harsh sentence? Let's face it, traditional lenders can be pretty unforgiving when it comes to less than perfect credit. But what if there was an option that looked beyond just a 3-digit number? That's where Uprova comes in. They advertise themselves as a lender for all credit types, which sounds too good to be true, right? Well, in today's video, we're going to crack the code on Uprova's requirements, explore what credit score you might actually need, and see if it's the right loan option for you. So, buckle up, credit warriors, because we're about to unveil the secrets of Uprova. Before we dive into Uprova, let's set the stage. Most traditional lenders rely heavily on credit scores. They use a specific score range, typically around 600 and above, to determine your loan eligibility and interest rates. The higher your score, the better the loan terms you'll qualify for. This system can be frustrating for people with a lower credit score, even if they have a steady income and a history of making payments on other bills. It can feel like you're stuck in a loop. You need a loan to improve your credit, but you can't get a loan because your credit score is low. Uprova. A different approach. Uprova positions itself as an alternative to this traditional system. They claim to consider a wider range of factors than just your credit score. This can include your income, employment history, and even your bank statements. The idea is to get a more holistic view of your financial situation, not just rely on a single number. So, the question remains, does this translate to you actually getting a loan with a bad credit score? The credit score for Uprova. It's more complicated than a number. Here's the thing. Uprova doesn't explicitly advertise a minimum credit score requirement. That's a good sign because it suggests they're open to working with a broader range of applicants. However, there are some clues scattered around their website. They mention they cater to people with poor or no credit history. This suggests they might be more flexible than traditional lenders, but it doesn't guarantee approval for everyone. Online reviews and forums paint a more nuanced picture. Some users with credit scores below 600 report getting approved for Uprova loans. On the other hand, others mention their applications being rejected despite having a score in the mid-500s. So, can you definitively say what credit score you need for Uprova? Unfortunately, there's no magic number. Uprova seems to assess each application on a case-by-case basis, considering your overall financial health, not just your credit score. Here's what can help your chances. Steady income. Having a demonstrably stable income stream shows Uprova you can manage repayments. Positive bank statements. A healthy balance and a history of on-time payments on other bills can boost your application. Limited debt. The less debt you have relative to your income, the better you'll look to Uprova. Is it right for you? While Uprova might be an option for those with bad credit, there are some crucial considerations. Interest rates. Uprova's loans tend to have higher interest rates compared to traditional lenders. This can make the loan more expensive in the long run. Loan terms. Uprova typically offers short-term loans with smaller amounts. Carefully consider if this fits your needs and repayment capabilities. Building credit. Not all Uprova loans report to major credit bureaus. This means they might not necessarily help improve your credit score in the long run. Uprova can be a lifeline for those facing a financial hurdle and struggling with bad credit. However, it's crucial to weigh the pros and cons carefully. Consider exploring all your options, talking to friends or family, seeking a credit union loan, or even negotiating a payment plan with your creditor before jumping into a Uprova loan. Remember, with any loan, it's vital to borrow responsibly and only what you can realistically afford to repay. With that said, thanks for watching, and until next time, stay informed and financially empowered.